Go crypto investing, and today we have the Fed raising interest rates again, probably 0.75, but the potential for a 1 basis point rate hike, which would bring the Fed's fund rate, as we'll get into here a little bit before we talk about the Bitcoin price. The Fed hard landing for the economy begins today. Blah, blah, blah. The Federal Reserve is trying to land a plane from the high sky of strong economic activity and elevated inflation, right? I don't believe we have strong economic activity. I believe our economy is very weak, and you're seeing that as they tighten a little bit, and they're not even really tightening that much. But we haven't had anything break yet. But I think we're about to have a couple of things break. The used car debt bubble with all the used car loans that the bank own. I believe there's going to be a crisis in there as people can't afford and they start missing payments on their loan payments to their banks on the cars they bought at a record high, which I believe the average car loan now is $40-something thousand, and it's over $800 a month is the average car loan per month payment. And as they can't afford to pay those, right, as everything gets tighter and tighter, they go into default, and then the banks got to repossess a bunch of cars. They start losing a bunch of money on people that foreclose on their cars, essentially, right, because they can't afford it, and their cars get repoed. And then I think that's going to be the first thing to pop. And then you got the housing problem and all kinds of other things. Starting today, or maybe it has been time for investors to buckle up their seatbelts, stow away their trade table and return seats to the upright position. The hard or soft landing, it's obviously not going to be a soft landing. That's impossible. By raising the interest rate another 7.75 basis points, say the Fed would bring the rate to a range of 2.25 to 2.5, or a neutral level estimated to the point at which any further rate increase would be restrictive to the economy activity. In September, economists expect the Fed to bring rates into this territory. The Fed has told us they are unlikely to let up on the brakes until they see convincing shift in the trajectory of monthly inflation readings that would signal progress towards the Fed 2% target, right? With interest rates at neutral, further rate hikes should have a more substantial bite into inflation, with it clocked in at 9.1% year over year in June, right? The central bank's own projection from June's estimate, the Fed needs to raise rates to 3.8 next year to pull off a slowdown in inflation. Deutsche Bank thinks the Fed will be forced to lift rates to 4.1, but Goldman Sachs said the Fed would not be able to push the rates past 3.5, because there is a breaking point where you raise the rates too high and everything just starts to break. The housing, the subprime, the used car loans, right? The credit cards, everything starts to blow up. And we're getting very close to that point, but we're still not there yet, as things have been in an orderly decline and not in collapse mode. You can see the dollar isn't really doing anything today. It's neutral. It's going to be an erratic day in the equity markets, the gold market, and the cryptos, and the dollar. As the Fed releases their minutes at 1:30 Central, 2:30 East, and then they have their press conference at 2 Central, 3 East, right? And the markets the last hour of the day go crazy up and down until they figure out their direction. And you can see the Bitcoin price did bounce last night. From the last time we talked, we were down in here, right down in there, and we thought it could bounce. And you did see it did bounce to upper resistance. upper resist down. And now if this is going to continue to play the pattern, you would come back down for at least one more touch and come down into this uptrending yellow line at the 20,278, right? But if you break it, you can come up to this upper resistance. That is a slightly uptrending upper resistance over here, and it's at 22,669 today, and that's what we're looking at for the upper resistance. But if it plays the pattern, it's going to trade back down towards that 20,000, right? It's a slightly uptrending 20,182, and that's your major underneath support, because if you break that 19,893 red line, you would have a pretty big fall down into somewhere in this white box, right? So that's what we're looking at there. The old XRP, you can see we got rejected, and we're still in the same spot we were yesterday. Yesterday we were in this range area-ish, and now we've fallen a little bit farther, bounced just above that white support zone. And if you come up to the 200-day and get rejected, you're likely to come down here on some kind of a pump today. Your first major upper resistance would be 37 cents. But in all the markets, you're going to see a lot of up and down, especially from 12:30 to 3:30 this afternoon as the Fed talks, the meetings are released, and questions are asked. You're going to see a lot of movement in the overall markets, up and down, up and down, up and down in a volatile way. So just be careful with that today. You can see XLM has actually come all the way back down and retested for once, twice, 3 times, 4 times. Now it's retested for a 5th time, right? And you can see you got a tight upper resistance. But if you break that, you can make a run all the way up here to 12.3 cents. But if you break down out of this today, if something horribly goes wrong, your next move down in XLM is all the way down here to about 0.07 cents. Like, subscribe, and share to Vincenzo's Go Crypto Investing. Peace and love. Peace and love.